Did you know that over 1 million UK homeowners are now at risk of losing their homes as interest rates surge and property values start to collapse? What if I told you the biggest housing crash in over a decade is already happening, right now, and most people don't even see it coming? The UK housing market is not just cooling off, it's breaking down piece by piece. Rents are soaring, repossessions are rising, and buyers are vanishing from the market. The dream of owning a home? Slipping further and further out of reach. But what's really driving this sudden collapse? It's not just one reason, it's a perfect storm of 10 deadly forces that are reshaping the housing landscape as we speak. If you think you're safe, think again. By the end of this video, you'll know exactly why the UK housing market may never be the same again. Number 1. Inflation and interest rates are skyrocketing. The UK housing market is being heavily impacted by skyrocketing inflation and interest rates. Over the past few years, inflation has steadily increased, causing the prices of everyday goods and services to rise. This surge in inflation directly affects the housing market, pushing property prices higher as the cost of construction and materials rises. Home buyers find themselves facing escalating property prices, which in turn make it harder for them to afford homes, especially first-time buyers. At the same time, the Bank of England has been increasing interest rates in an attempt to control inflation. While this is a necessary step to stabilise the economy, it has the unfortunate side effect of making mortgage repayments much more expensive. Those with variable rate mortgages are now facing significantly higher monthly payments. This increase in interest rates has a double-edged effect. It not only makes homes harder to afford in terms of purchase price, but also makes owning a home more financially burdensome for those already in the market. The result? Buyers are being squeezed out. People who may have qualified for a mortgage just a year ago are now finding that they can no longer afford the same property due to higher borrowing costs. For many, it means they are stuck in the rental market, which is also seeing its own price hikes. These increased costs are causing a slowdown in market activity, with fewer people able to enter the housing market or move up to their next home. The combination of inflation and rising interest rates is creating a perfect storm that is leaving many homeowners and potential buyers vulnerable. Number 2. Overvalued property prices. The UK housing market has been grappling with overvalued property prices for years, and this issue is reaching a tipping point. For a long time, the market has been inflated by the easy availability of credit and artificial demand driven by government-backed schemes like Help to Buy. These schemes, while well-intentioned, have caused prices to rise far beyond what is sustainable. The result? A housing market that is out of sync with the real economy. For many potential buyers, properties are now far too expensive in relation to their income levels. The price-to-earnings ratio for homes has increased dramatically, making it harder for people to afford a home without taking on significant debt. This has led to a situation where many are buying properties that are priced well beyond their actual market value. As the economic conditions continue to tighten, the risk of a housing price correction is becoming more likely. This overvaluation is also creating a situation where homeowners are deeply in debt. Many have purchased homes at inflated prices, leaving them vulnerable if the market starts to correct itself. In the worst-case scenario, homeowners could find themselves with properties worth less than they paid, leading to negative equity. This can leave people stuck, unable to sell their homes or move up the property ladder. The overvaluation of property prices has not only created an unsustainable market, but has also led to widespread financial insecurity for many individuals. As prices begin to fall, those who were once able to afford a home may find themselves facing a housing crisis they weren't prepared for. The question now is, how long can these inflated prices remain? The pressure is mounting, and the eventual correction could be painful for both homeowners and investors. Number 3. Housing supply is at an all-time low. The UK is facing a severe housing shortage that has reached crisis levels. Despite growing demand, the supply of homes has not kept pace with the needs of the population. The reasons for this are complex, but a key factor is the failure to build enough homes to meet the rising demand. Over the past few decades, the UK has been underbuilding, with a chronic lack of new developments and insufficient investment in affordable housing. The planning process is often slow and obstructed by stringent regulations, making it difficult for developers to build new homes at the speed necessary to address the shortage. Local councils, facing budget constraints and opposition from communities, are reluctant to approve new developments, especially in urban areas. This bottleneck in housing construction has resulted in stagnation, with fewer new homes entering the market to keep up with the growing population. The consequences of this housing supply crisis are significant. With fewer homes available, property prices continue to soar, making it even more difficult for first-time buyers to enter the market. The lack of affordable housing is pushing many renters into the private rental sector, where demand is outstripping supply. This, in turn, is driving rents to unaffordable levels, further squeezing the financial well-being of households. The housing shortage also contributes to rising levels of housing inequality. As prices climb, only the wealthiest individuals can afford to buy, while those on lower incomes are left with limited options. The resulting social divide is stark, and the problem will only worsen if steps aren't taken to drastically increase housing supply. Without a solution to this issue, the UK risks a future where home ownership becomes an unattainable dream for many. The housing crisis is not just about a lack of homes, but about the affordability and accessibility of housing for all. Number 4. The end of the stamp duty holiday. The stamp duty holiday, which was introduced in 2020 to stimulate the housing market during the pandemic, played a significant role in driving the recent housing boom. By temporarily suspending stamp duty on properties up to £500,000, the government incentivised buyers to act quickly, resulting in a surge in demand. As a result, property prices rose rapidly as a direct consequence of the increased activity. However, with the stamp duty holiday now over, the market is beginning to cool. The immediate impact is clear. Demand has dropped, and many potential buyers are finding themselves priced out of the market once again. The removal of this incentive has left many people wondering whether they can still afford to buy property at inflated prices without the tax relief they once enjoyed. As a result, many are either postponing their home buying plans or abandoning them entirely, contributing to a slowdown in market transactions. First-time buyers, who were already struggling to get onto the property ladder, are especially vulnerable. Without the stamp duty holiday, the costs of purchasing a home have once again increased significantly, putting home ownership further out of reach for many. With mortgage rates climbing, even those who can afford the upfront costs are facing increased monthly payments, making it harder to sustain home ownership long term. Additionally, sellers are feeling the pinch as demand dwindles. Homes that were once snapped up quickly are now sitting on the market for longer periods, forcing sellers to lower their asking prices. This slowdown is further contributing to the uncertainty in the housing market, as people adjust to the new reality without the boost provided by the stamp duty holiday. For those hoping the housing boom would continue, the end of this incentive marks a difficult shift towards a more fragile and unpredictable market. Number 5. Rising energy and living costs. In addition to the pressures caused by the housing market itself, the UK's housing crisis is being exacerbated by rising energy and living costs. Over the past year, energy prices have skyrocketed, with many households seeing their bills more than double. This surge in energy costs means that more people are spending a larger portion of their income just to keep their homes heated and powered. This creates an additional financial burden for homeowners, renters, and potential buyers alike. For homeowners, these rising energy costs are creating a perfect storm. As mortgage payments rise due to increasing interest rates, many are finding it difficult to make ends meet. The combination of higher energy bills and higher mortgage payments leaves little room in household budgets for other essential expenses. In some cases, homeowners may be forced to choose between paying their mortgage and keeping their home warm. This financial strain is likely to lead to a rise in arrears and repossessions as people struggle to keep up with both their housing and energy costs. Renters are equally affected by the increase in energy prices, as landlords pass on higher utility bills to tenants. Rents have already been increasing across the country, and rising energy costs only make it harder for tenants to find affordable housing. Many are forced to stretch their budgets just to cover monthly rent and utility costs, leaving them with little financial flexibility to save for a deposit or consider purchasing their own homes. Beyond the immediate impact of rising energy prices, these soaring living costs are causing people to rethink their long-term housing plans. Potential buyers, especially those in lower income brackets, may be opting to stay in the rental market longer, unable to afford homeownership while balancing the increased cost of living. The financial squeeze is pushing more people into a cycle of housing instability, leaving the housing market in a precarious position. Number 6. Governments struggle to address housing crisis. Despite various attempts, the UK government has struggled to effectively address the housing crisis that has plagued the country for years. While policymakers have promised to increase housing supply and make housing more affordable, the measures they have introduced so far have been largely ineffective in tackling the root causes of the problem. The housing shortage remains severe, and many of the solutions proposed have been either too slow or insufficient in scope. One of the key issues is the planning system, which is deeply entrenched in bureaucracy. Local councils, often under pressure from residents who oppose new developments, are reluctant to approve large-scale housing projects. This has led to a bottleneck in housing construction, meaning that much-needed homes are simply not being built at the rate required to meet demand. Even when new housing developments are approved, the process can take years to move forward due to complex regulations and planning delays. The government has also struggled with policies aimed at addressing affordable housing. Although there have been various initiatives, such as the introduction of the Affordable Homes Programme, these efforts have not kept up with the scale of demand. The target of building 300,000 homes per year remains far from being met, and the lack of affordable housing continues to push many people out of the market, especially first-time buyers. In addition, government subsidy schemes like Help to Buy have provided temporary relief, but have also contributed to price inflation, making homes even less affordable in the long run. Despite these challenges, the housing crisis continues to deepen as the government fails to address the issue at its core. As a result, more people are left unable to buy homes or secure affordable housing, with no clear solutions in sight. Number 7. Increasing number of buy-to-let landlords selling up. The UK housing market is seeing a significant shift with an increasing number of buy-to-let landlords choosing to sell their properties. This shift is driven by several factors, including changes in tax laws, rising interest rates, and a decline in property profitability. For years, the buy-to-let market was a popular and lucrative investment option, with landlords earning substantial returns through rental income. However, recent policy changes, such as the restriction of mortgage interest tax relief, have made it less attractive for landlords to hold on to their properties. The introduction of higher taxes on rental income and stricter lending criteria for landlords has created a financial strain for many in the buy-to-let sector. With mortgage rates rising, many landlords are finding it increasingly difficult to maintain their rental properties without seeing a significant dip in profits. The result is a growing trend of landlords deciding to sell up, either to cut their losses or to move their investments elsewhere. This shift in the buy-to-let market has further impacted the housing supply, particularly in areas with a high concentration of rental properties. As landlords sell off their portfolios, the properties they once rented out are now entering the market, leading to an oversupply of properties in certain regions. While this may seem like good news for potential buyers, the sudden influx of homes for sale has led to market instability. As more properties flood the market, the competition among sellers increases, leading to price reductions and potentially forcing homeowners who are already struggling with rising mortgage costs to lower their asking prices. The ripple effects of buy-to-let landlords exiting the market are far-reaching. rents are likely to rise as the availability of rental properties decreases, leaving tenants with fewer options. This shift is reshaping the housing market, and those hoping for a stable and affordable property market may find themselves facing additional challenges. Number 8. Unaffordable rent prices. The skyrocketing. Rental prices in the UK are becoming a major issue, making it increasingly difficult for many individuals and families to find affordable housing. The demand for rental properties has surged in recent years, yet the supply has not kept pace. As a result, rents are at historic highs, especially in major cities like London, Manchester, and Birmingham. For many, renting has become the only viable option, but it is increasingly out of reach. The growing gap between wages and rent is contributing to a situation where renters are dedicating a larger portion of their income to securing a place to live. In some areas, rent now takes up more than 50% of a tenant's monthly income, leaving little room for savings, personal expenses, or investments. This is putting a significant strain on people's financial well-being, especially for young professionals and low-income families who are struggling to keep up with rising costs. Moreover, landlords are facing increasing pressure due to higher maintenance costs, rising energy bills, and changes in tax laws. To offset these rising costs, many landlords are passing them on to tenants in the form of rent hikes. As the cost of living continues to climb, renters are left with few options but to pay the higher rent or risk being priced out of their neighbourhoods altogether. For many, this rising rental burden creates a vicious cycle. Unable to save for a deposit due to high rent, renters are locked out of the property market, further fueling the growing divide between renters and homeowners. The lack of affordable housing and the ever-increasing cost of rent are pushing many into a state of housing insecurity, with fewer options available as rents continue to rise. This is one of the primary factors contributing to the housing collapse, as more people find themselves trapped in an unaffordable rental market. Number 9. Rising risk of repossessions. As the UK housing market becomes increasingly volatile, the risk of repossessions is on the rise. With mortgage rates increasing, many homeowners are finding it harder to keep up with their monthly payments. Those who bought homes during periods of low interest rates or took out variable rate mortgages are now feeling the financial strain as their repayments soar. As a result, a growing number of homeowners are at risk of falling behind on payments and facing the prospect of repossession. The increasing cost of living, coupled with higher energy bills and inflation, is making it even harder for people to make ends meet. Those already struggling with rising living costs are finding it particularly difficult to manage additional financial pressures such as mortgage payments. Job insecurity and the overall economic uncertainty only add to the anxiety many homeowners feel. For some, the idea of losing their home becomes an increasingly real fear as their financial situations worsen. Banks and lenders, while often reluctant to initiate repossessions, may begin to act as default rates climb. The threat of repossession, especially for first-time buyers and families, is becoming a very real concern. For those caught in this difficult position, repossession can have a devastating impact on both their financial future and emotional well-being. Many will find themselves trapped in a cycle of debt, with their homes being sold off at a loss, resulting in negative equity. This uptick in repossessions could lead to a wave of distressed properties flooding the market. As more homes are put up for sale under financial duress, the housing market could face further instability. For potential buyers, this means an influx of lower-priced properties, but also heightened market uncertainty. The increasing number of repossessions is a sign that the housing market is struggling to maintain its balance, putting both homeowners and future buyers at significant risk. Number 10. Economic uncertainty and job losses. Economic uncertainty is one of the major drivers behind the current instability in the UK housing market. With rising inflation, global supply chain disruptions, and ongoing geopolitical tensions, the broader economy is facing significant challenges. This economic instability has created a climate of fear and hesitation among both buyers and sellers, as many are unsure of what the future holds. The uncertain financial environment is making it harder for people to make long-term commitments, particularly when it comes to purchasing homes. One of the most pressing concerns is the risk of job losses. As businesses face rising costs and shrinking profits, many are resorting to layoffs, particularly in sectors hit hardest by the economic downturn. With unemployment levels rising, many potential homeowners are becoming more cautious about taking on large financial commitments, like mortgages. This job insecurity creates a ripple effect throughout the housing market, as fewer people are in a stable position to buy homes. For homeowners, the spectre of job loss could lead to mortgage arrears, and in extreme cases, repossession. Even those who are currently employed may be forced to tighten their belts, cutting back on spending and delaying any plans to move or upgrade their homes. Job instability means fewer people are willing to take on the risk of a new home purchase, and some are opting to stay in rental properties rather than entering the volatile market. The combined pressures of economic uncertainty and rising job losses are only deepening the housing crisis. As the economy continues to struggle, the housing market faces a fragile future, with many potential buyers unsure whether they can afford the high prices or whether it's the right time to buy. This uncertainty is slowing down market activity and contributing to the growing instability of the housing sector. As we've seen today, the UK housing market is on the edge of a major crisis, with inflation, rising interest rates, and a lack of affordable housing leading to unprecedented uncertainty. It's clear that no one is immune from this collapse, whether you're a homeowner, a potential buyer, or a renter. The question is, are you prepared for the financial storm ahead? I'd love to hear your thoughts on what's happening in the housing market. Do you think these issues will get worse? Or is there hope on the horizon? Let me know your opinion in the comments below. Your voice matters. And if you haven't already, make sure to check out my previous video where I dive deeper into the impact of rising energy costs on the housing market. Trust me, you don't want to miss it. We put a lot of time and effort into creating these videos to keep you informed, and your support means everything. So please, just take one click to hit that subscribe button. It helps us reach more people like you who want to stay ahead in today's fast-changing world. Thank you for being a part of our community.